What's up everyone, this is Patrick Liu. With the stock market crashing, I'm sure a lot of people are thinking about shorting or has already shorted the market or some particular stocks. Today, let's talk about short selling and why I don't do that. In the stock market, you can either go long with the stock or go short. Go long basically means if you buy stock, the price goes up, you make money. The price goes down, you lose money. Short selling is basically reverse of that, but a little bit more complicated. When you short a stock, you sell those shares first. Then when you want to close that position, you buy those shares back. But you may be wondering, how are you going to sell when you don't even have those shares? You borrow them. Usually you borrow from your broker. So once you shorted the stock, the price goes down, you make money. But the price goes up, you lose money. But let's talk more in depth. The good and the bad. The good thing about short selling is you can make a lot of money in the short term. Typically, the stocks goes down faster than it goes up. So you can definitely make a lot of money if you're right. Especially now when we are in a bear market, almost everything will just keep falling down. Another good thing about short selling is you don't need a large capital to start with. Since you sell first and buy those shares back later, you pretty much just start with other people's money and shares. And if that stock price drops down, you just use the money from your sale to buy those shares back. And whatever is left is your profit. But keep this in mind, you are required to keep certain level of cash in your account. Last, short selling is definitely a good way to hedge a position if you know what you're doing. Now let's talk about the bad and the reason why I don't short. First, let's talk about the risk and reward. When you short a stock, the most you can make is 100% of your initial investment. That's when the company go bankrupt and the price goes to zero. But the risk of your loss is theoretically infinite, since there's no ceiling of a stock price. Let's look at Amazon's price. You think $1,000-something per share is high? Now let's look at Berkshire Hathaway. Your loss can be unlimited. You also have to consider this. Only because a company is facing huge trouble that might go bankrupt, that doesn't necessarily mean that they will go bankrupt. There's also a possibility that this company will be bought by another company, and we do see that often. So I don't really like the risk and reward. Second, if you want to short a stock, you need a margin account. And when you short selling, you are on margin trading. Just like you borrow money, when you borrow shares, you have to pay interest on those shares. Also, if the price didn't go as you planned it goes up huge. And now you start losing a lot on that position. And once it gets to certain points, you will get a margin call. Basically, it means now you have to put more money into your account. Otherwise, your broker will just close the position for you. And once that position is closed, whatever the loss is, you still have to pay the money back to your broker, plus interest. They are not doing charity here. They are here to make money. They lend you money. You have to pay them back with interest. Alright, remember I said this earlier? The stocks go down faster than they go up. Well, there's a second part to that line. The stocks go down faster than they go up, but go up more than they go down. I don't know exactly where this quote is from, but I hear this often from the host of the Motley Fool podcast, David Gardner. Maybe this is from him, I don't know. Maybe you can let me know down in the comment. What I mean is that if you are investing in a good company with a good business model, with a well-run management team, and a good balance sheet, more likely the stocks will go up in the future. And if I see a company that are in huge trouble and might facing bankruptcy, I would just leave it alone. I hope the best for that company, but I wouldn't even touch it. There are thousands of stocks in just United States, and there are tons more in Europe, in China, in Japan, in Korea, and more other places. I would just focus on other buying opportunities. Even when we are in a bear market, like what we're experiencing right now, I still wouldn't even considering shorting a stock. Because when it comes to short a stock, timing is crucial. When your timing is too early, you might facing margin call. When your timing is too late, there's less profit to take. But also you're facing a huge risks. I don't think I'm that kind of person that can time it right all the time. I might get lucky a few times, but to keep it right all the time, nah, I don't have that kind of confidence in myself. Also, you need to consider the short squeeze. If a company is heavily shorted, but when the prices start to trending up, short sellers start going to cover up their positions, and this will push up the price. And when the prices pushes up, this will attract other buyers to start buying the stocks, and this will push the stocks going up even further, and that also causes more short sellers to cover up their position, and now you are just in a loop. We seen this last year with Tesla. Tesla went from 180 to 900 something plus within just few months. This is crazy, and part of the reason is the short squeeze. Alright, two things we learned today. First, short selling is a dangerous thing to do, especially if you are a beginner just like me. Just leave it alone. Don't even think about it. Second, shorting Tesla is a huge mistake. I know a lot of Tesla shorts will hate me for saying this. Well, I don't care. I'm a Tesla bull. I have a very comfortable position in Tesla with a very good cost basis. And if Tesla dropped even more than what it is right now, I don't mind to pick up a few shares. Destroy the like button if you enjoyed this video and subscribe if you want to see more. And until next time, peace. Shh.